Hello, welcome to this week's Forex Outlook here at xm.com. I'm Rafi Barajan, currency analyst, and here with me is our chief economist, Michalis Sorenjadis. So Michalis, we had the FOMC meeting this week. It did give the dollar a little bit of a support, but the dollar index appears on track to end the week marginally lower. On the other hand, versus the yen, it's seen a bit of a bump up. So what were the main drivers this week for the US dollar?
I think what is interesting about the week that was that the dollar was a little weaker, as you said, but it did not display this across the board weakness. So it was weak versus the pound and the euro. We can touch a little bit why that happened, but actually the dollar managed to post gains against the yen, the Aussie, the Kiwi. So I think that was interesting, this dichotomy of who did well against the dollar and who did badly. Now, the pound is always quite volatile these days. There was a boost from Mark Carney, I guess, because he talked about monetary policy becoming more regular. So Brexit might not be such a huge issue anymore for Mark Carney. Maybe he's assuming that it's going to go more or less well. I think the market is also assuming that. Eurozone data were in line, but they were positive, so they were good data that helped the euro. One thing that happened was that bond yields were up, and this pushed the BOJ to intervene today in the markets, actually to try to buy some long-term Japanese bonds to keep the bond yields low. And finally, I think the Fed has signaled that it's going to raise rates in March. It was Janet Yellen's last Fed meeting. There wasn't something too surprising around that meeting, but it seems that the Fed is going according to plan in raising rates.
Now, given that the Fed wasn't able to give the dollar much of a lift, can we expect anything from the non-farm payrolls report? That's going to be the main focus later on today. The headline figure is expected to improve to 180,000, but should we be watching out for any major moves?
I think, of course, the headline number, the number of jobs created, is going to be watched, but I also think that wages and wage growth is becoming more important now, because keep in mind that higher wages could feed to higher inflation, and this could help the Fed maybe accelerate a little bit its normalization process, the policy normalization process. Having said that, wages are expected to hold at 0.3% month on month, around 2.5% year on year. So not really sure whether if the report comes in line, then it should the Fed is going to stick to the schedule of 2 to 3 hikes. It's looking like 3 hikes. Some outlier calls calling for 4 hikes. That's not really out there right now. It's between 2 and 3 hikes, more towards 3. And having said that, Rafi, can you please tell us what to watch for next week, or what is going to be interesting?
Well, the highlight, I guess, was going to be the Bank of England's policy meeting. And given what you just mentioned about Mark Carney's remarks at a hearing in Parliament, the Bank of England, of course, the other thing to note this at the next week's meeting is going to be the quarterly inflation report coming up, plus a press conference with Mark Carney. So we could see a change in the bank's outlook on growth and inflation. If those projections are stronger than expected, that could potentially signal a rate hike well before the end of the year, which are the current market expectations, and we could see the pound heading further up. We're going to see more central bank meetings. We've got the Reserve Bank of New Zealand and Australia both also holding their monetary policy meetings. In data-wise, the focus will be on the services PMIs. We've got the US ISM manufacturing PMI, UK services PMI. We're also going to have trade numbers out of China and the Canadian jobs report later at the end of the week.
I think it's very interesting for the 3 banks that you mentioned that maybe none of them is close to raising rates. I don't think that's happening anytime soon. But if there is some adjustment in their outlook, this could maybe help their respective currencies. Although, as we said, we have to stress this, it's not a matter of rate hikes coming in the next quarter or even 6 months. I'm not sure, but maybe in the future. Thank you very much, Rafi, for your input. Thank you very much for watching and have a great day.